Hi, this is Shari Frasure, and I'm with Keller Williams, Greater Lexington, and I have with me today Adam Hires. He's with Movement Mortgage, and I wanted to talk to Adam today and let him give us some information on the dangers. Maybe there are some positives too, but there's some reasons why you probably would be better off not going with an online loan company. There's several of them out there, and it's convenient and everything, but in the long run, you're going to really regret going through companies like that. So I'm going to let Adam kind of give us some information about online lenders and why you should give him a call or a local lender instead. So Adam, I'm going to give it over to you.
Absolutely. Thank you so much, Shari, for having me on. Like she said, I'm with Movement Mortgage here I live in Richmond, Kentucky, but my office is in Lexington, so I, help surrounding counties there. Know that, Shari, I think you're out of Winchester there, so definitely help people in Winchester as well.
I'm in Winchester, just like you. I work everywhere in Kentucky, but specifically Central Kentucky.
Exactly. You live around. Good. Yeah, exactly. Yeah. And I got the HC on. It's not, you see, we're probably thinking, what's that? Because it doesn't stand for Movement Mortgage, but I'm
right.
Hires coaching, so I run a coaching company as well.
You do.
But yeah, definitely love to talk about this subject because it's very critical, mission critical to talk about and educate people on what they should look out for.
Mm-hmm.
I won't sell my product, my services on here as far as Movement Mortgage.
Right.
So I want everybody to tune in and listen with just an open ear, and not this be a sales pitch of why you need to use me. You don't have to use me. Mm-hmm. That's all good. I get plenty of business, and I'll tell you why I get plenty of business and why some other local lenders get plenty of business that do it the right way. Mm-hmm. So first thing is you definitely have all those companies out there pitching all, it's easy, all you do is click a button. Mm-hmm. I will say that I hope it never gets to that point, or, I'll be out of a job, right? As far as that, I'll have my Hires coaching, that'll be good. But as far as mortgages, I'll be out of a job because it was that easy. Then, that you could just go through anybody and it would be fine. The simple fact is it's not that easy. Uh-huh. And so please, if you're listening to this, understand if you're a first-time home buyer, you bought before in the past, you kind of forgot it. It's kind of like they say women, when they have a baby, they like years later, they forget that how painful it was to have a baby and they're having another baby. It's kind of like you go through a mortgage process, you forget how painful it was, and you come back for more and you think it's just going to be easy, and it's not always easy, right? We understand there's a lot that goes into these. So you have to understand that premise, first of all. So that if you out of the gates understand that, and you understand all that marketing is marketing, and it's not that easy, that will be a good baseline to start with. Yes, you can apply online places. You can hit that button. There's plenty of other local lenders can do the same thing.
Right.
My company does it. It's easy. But actually, people have said ours is easier than the big one out there that everybody knows. And it's easier to click through and do. I don't know. I mean, I've never done theirs. I've done mine, ours, just to see how it is. It's very user friendly. But other companies in this area have great products like that with their mobile apps. Very easily click a button. The big difference really is in the loan officer. It's not so much the company. It's who the loan officer is, what team they're working on.
Right.
You can go to somebody in Oregon. I'm just going to throw Oregon out there. I don't know. And just pick somebody in my same company and have a totally different perspective of how the loan process went compared to if you went through my team. Mm-hmm. Right? Like that. It's all in who the loan officer is, because things don't always go right. That's the whole deal behind this. There's a lot that goes into it that people just don't know. Lending is very odd, very odd. And so there's rules out there that make no sense. And I tried to explain to my borrowers, I understand that doesn't make any sense. Doesn't make any sense to me. I
Mhm.
wish I could change it. This is the guideline across any other company because it's a guideline of that certain product. And that's the way it's going to be. And it doesn't make sense, but let's navigate through it. So there's going to be things that are going to come up. You want to, the number one thing is you want to have communication, right? That's the number one thing. When I ask real estate agents, when I ask borrowers, clients in the past, whatever, what's the one thing, overwhelmingly, what's the one thing that you need? And that's communication. So people can handle the truth, but you need to tell them the truth. You need to educate them what's going on. You need to tell them. And the second thing is why. The second thing is why. You need to tell them what's going on. You need to tell them why.
Mhm.
And what I can tell you is that online lenders don't always communicate. They funnel it in. It's a funnel, goes through a funnel. They get the apps, they talk to you, boom, and they funnel it off. And then they really, if it funds, it funds. There are certain companies out there, I'm not going to again not name any names, but the big company you probably know out there, their loan officer gets paid. This is scary. Gets paid whether it closes or not. Now, a lot of people will say, hey, I don't like people that make commission. I don't like commission people. I don't like salespeople. Well, I can tell you, sales commission at its finest is the best service you'll ever get. Try going through a drive through and then try going through a Jeff Ruby's and see which service is better, right?
I totally agree
Jeff
with that.
Ruby,
Yes.
right? So
Our service is dependent on whether we get referrals or not.
Right. So that's a key factor in this whole thing we're talking about. You want somebody that is invested in getting paid whether it funds or not, because that is their lifeline. And so you want that. And further extension on that is you really want them to have skin in the game. It's if I'm in, I don't know why I'm picking Oregon. I'm just going to say Oregon. But if I'm in Oregon and one of these companies, I don't necessarily care if Shari Frasure is upset with me that the loan doesn't close on time, right? Like I do personally, but you get the point. They don't have skin in the game. So it's, well, Shari's mad at me. Oh, well, I'm never going to get any business from her in the future anyway. Right? So if that loan goes sideways, it's all like when I coach people, it's about the why. Like if you have a big why, then you're going to find a way to get things done. And what you're going to find is when somebody is states away, they don't really have the why behind making that deal work or trying to get it closed on time, which is another issue because they really, if it closes, and they're not concerned about Shari being upset with them or the buyer being upset with them, because at the end of the day, it's not going to affect future business.
Right.
Whereas a local lender, if you get a good local lender, and I'm not just talking about me, I am not so egotistical to think that I'm the only local lender that does a good job. There's excellent local lenders out there. Do I think we do the best job? Absolutely. You have to have that pride. And I firmly believe that. But you can go with other lenders. And when I talk to someone and they say, hey, I'm talking to you, I'm talking to this other lender that's local, and I'm talking to this company that's states away. I'm like, first of all, if you don't have to go with me, but I'm telling you right now, please do not go with that out-of-state lender.
Yeah.
Go with the other one. Like if there's even a chance, I'll even bow out. Like I would rather you use that local lender that I know is good. You told me who that is. They're a good lender. Go with them because I know they have vested interest in closing your deal. And that's our lifeblood of business, getting deals, future deals. And I get, like, my business has grown just exponentially year after year because I get referrals over and over and over locally because I do a good job and I make sure that I'm doing everything I can to close that deal. And stuff doesn't always go perfect, but they know at the end of the day, I'm doing everything I can. And what I can tell you is that you don't know that from a non-local lender. So that's in a nutshell, the biggest reasons why. But there's one other thing, and this is where they really get you. If there's a bait and switch out there, guys, Ladies and gentlemen, you got to watch out for the bait and switch. So we talked about the other things. Here's where they'll get you. And so if you ever have any kind of, they send you anything, a good faith estimate, breakdown in details. I'll name this example. So I had a guy that I was helping. He all of a sudden shot me against some out-of-state lender. He says, "Hey, listen, they're half a point lower, and they're only going to be $500 more at the closing table." And I knew I had a great rate and all that. I knew it. I was like, "There's no way." I know how much are in loans. Can I see? May I ask if I can see that sheet? So he sent it over, and it's exactly what I suspected. What did they do? Here's where they'll get you guys, ladies and gentlemen. They will reduce your escrows, which is your taxes and your insurance, to a level that you cannot get, especially your taxes. They'll cut it in like a half or less. So I said, "Listen," this guy was very intelligent. I said, "Dustin," I won't say his last name. I said, "Dustin, let me ask you something. Do you see this line where it says discount points?" And it was like $3,000. He said, "Yeah." I said, "Yeah." He said, "Yes." I said, "Do you feel like bringing," I don't remember what it was, like $10,000. He said, "I don't have $10,000. I said, "If you stick with them, you'll bring $10,000 by that same thing." He said, "How is that?" It says only $500 more dollars, and what you're saying is $5,500. I said, "Because that discount points that you're seeing right there, and are covering up because they are reducing your escrows." And I said, "Here's what's going to happen, because this is what they legally can do. This is the legal way they can do it. 7 days out, they send you another loan estimate. They correct the escrows. All of a sudden, he's going to bring 10 grand. Then what they do? He flips out and, I don't have $10,000. So then they put the rate back up because it's not costing them discount points, and bring them back down basically to where we started at.
Yeah.
They win the deal. He's not really happy with it. They don't care that he's not really happy with it, because they close the deal. It doesn't affect them. That is something I will not do. If you legitimately are better, somebody has a better rate, better terms, and everything else, fine. And I can't touch it. Go with them. But that is the thing where I'm like, please don't. I literally had this happen yesterday too. They have this rate, and I'm like, there's impossible unless they're doing discount points. Finally, he got hold of it, $4,000 of discount points. I'm like, right? They're just not even disclosing it. They're trying to just throw this mud against the wall, and it sticks because people go under contract, they go and refinance, and then time they realize what's going on, it's too late, and they're just ready to close, and they just close. So you got to watch.
That's what I was going to say. By the time that you figure out, even if you do tell them, that once they're at a certain point, they can't go back, because they've already made that commitment. They've already signed documents. They've already agreed to that loan, and it can get quite messy.
Yes.
Which that kind of is very helpful to me, because I didn't really understand how that worked. Now I know. You educated me. I didn't know that's what they did, because anytime that I get an opportunity to tell a buyer, or even if I'm on the other end of it, I'll tell the other agent, I'm not comfortable, with your lender, because they're out of state, and we, because if you're a new real estate agent, you don't know that either. You don't have enough experience to know that that these things are going to happen. So I will always let them know that.
And you're touching on a great point. You're touching on a huge point, like that if you're out there and you're a buyer, and you're going to you're saying, "Hey, listen, they pre-approved me." Understand, in this market, you may go against 4 or 5 other people. What do you think out there? As we talked about it, you know the answer, Shari. If you have 4 or 5 offers on the table, and 3 or 4 of them are from local lenders, you got one that's out of state lender. They can sometimes be a higher offer and say, "You know what? I'm not going to take that," because the seller wants the sure money. They want more of a surety of that's going to close.
Yeah, but unless the real estate agent's telling them that the seller doesn't know any better either.
Well, the
So
seller doesn't, but the seller agent does, right?
yeah,
So
that's what I mean.
yeah.
So it's up to the agents to let their clients know that's probably not as strong an offer as it would be if local. And the thing about it is they don't necessarily they may be able to get qualified, and they probably would be able to get qualified locally just as easily. But the really good thing about it is, as a real estate agent, that I prefer is that I work with somebody. It doesn't have to be somebody that I've even worked with before, as long as they're local and they're reputable, because I can, know I kind of have an expectation of what that lender can do. And there are some lenders, and you're probably one of them, that doesn't, they won't even give a pre-approval letter without being at a certain point with the buyer that they have collected some documents and stuff. I mean, they will give pre-approval letters, but pre-qualification letters, there's a difference there. And that's something else that you might want to speak to is, what is the true, when a buyer comes to me and we're pre-approved for a loan, what does that really mean?
So there's pre-qualification, there's pre-approval. Most people, like I will pre-qualify people, for example. That means just they are filling out, they're giving their information. We're going over their information. They may not produce all their documents. Pre-approval is, and this is all the kind of is loose definitions according to your lender is as well. But pre-approval are more standard of having documents and collected and taking a look at them. What I will say is that asking the right questions, if you have a good lender, asking the right questions, most of the time, they don't necessarily have to have all the documents to know whether that's going to be good or not. They just know that they know the questions asked. They're professionals. The big difference is that, again, mud against the wall. If, we, as good lenders, as people that care about the service and care about getting that to closing and care about our reputation, will not just haphazardly throw out pre-approvals. I've only had a few that pre-approvals, pre-qualifications, what have you, that I've thrown out there in 4 years, and I've done hundreds of loans. That has been a miss by myself of not seeing something or not asking the right question. Only a few. And so the good lenders know the right questions to ask, and that's a big thing. But the biggest thing is not just taking chances. I'm very upfront. If I think, hey, listen, this is a tougher one. They got a little lower credit score. They're really on the edge on debt ratio. There's some things here. Get me all your documents. Let me make sure. We're going to pause. If somebody's got a 740 credit score, they're making plenty of money. The debt ratio is great. We know that, everything's in line. That's going to be good. And most any lender can do that deal, even online. Then it all just becomes on the service level. What I can say, a couple things I want to touch on as well, that you want to, especially for first-time home buyers, check with your local, your local loan officer, is that those online lenders a lot of times don't have the state programs. A couple state programs that can help is a down payment assistance. That's one. That's the main ones. And the second one is, fun fact for you, I did more in these than anybody in the state of Kentucky last year, which is a MCC tax credit. What is a MCC tax credit? It's a mortgage certificate credit, which can get you 25% of your interest back in taxes a year. So if you have a 3% interest rate, it's essentially a 2.25% interest rate over a course of a year. And every year you're getting that back, 25% interest every single year, which is something that an online lender does not do, because they don't have that. And so it's a huge savings. And I've won tons of deals for that when, I'm like, you're going through them. Well, great. Did you know you're qualified for this program? And they can't compete with that. There's nothing to compete with that. That's a huge savings.
And I don't know a lot about that program because, of course, not being a loan officer, I wouldn't be able to speak to that. But I have had experience with buyers that did qualify. And one of the things that I think that people don't realize is that that can help them qualify for their loan.
Absolutely. Yes, very, very good point too. Like, for example, around here, the USDA loans, it reduces. It depends on how that all plays in, but on a USDA loan, it reduces basically what their obligated monthly payment is for their home, which can sometimes add $30,000 to their approval, just by that alone. And then the other program, depending on what, like FHA, conventional, it'll add to their income, as it'll base it like it's an income. So an extra $100 a month basically for income, and that could qualify them for a little bit more as well. And
Right.
so it's a really good program. I love doing them. Every time I have it, like, I don't even do it to win deals. So I want to make that very clear. If I see that the opportunity is there to do that, we do it. It's more work for us. We don't make a dime off that. Like that, it's just a service, but it's something that is really good for the buyer.
Right.
And there's other lenders, local lenders that do them. So again, I'm not the only one that does it. If you're out there, check with your local lender. If you're talking to them, if you're making, especially, it depends on where you're at. If you're making somewhere around the $80,000 mark and below, then you want to, ask. Some places it goes higher depending on how many dependents you have. It can go, look higher. Let's just even say you make 100,000 or less, depending, and just ask your local lender, am I qualified for that program? And that definitely is something, again, an online lender is not going to have for you.
Right. And I'm glad you brought that up. I was going to ask you to speak to that because there's a lot of first-time home buyers out there that really they're totally clueless on what there is out there. They don't know anything about Kentucky housing. They don't know about what an FHA loan is or a conventional loan, and so a lot of times they assume that if they don't have 80% down, which this used to be the norm. It hasn't been in several decades, but that if they don't have 20% down, they can't get a loan. And the truth is there's lots of loans out there that are even 100% financing. There's down payment assistant programs, but typically, you can pretty much count on about 3.5% down in most loans. So these are lots of things that people that are kind of on the fence, or let's say that they've been renting for a long time and they've got a good paying job and they got their credit score up there, which one of the questions I would like to ask you is, what is your minimum credit score for the most part?
Ours is 580 right now. Before the coronavirus hit, it was 580. We do expect to go back there. That's 580 is really the lowest on any standards you can go. We were at the lowest. We'll probably get back there, 620 right now. Sometimes if you're not 620, then they can bump their score up. I do credit simulators all the time. Even if you're at a 580, maybe it's still time to wait and get to 620 because you get better pricing. 580 kind of gets you a little rougher with everybody, every lender, because that's more risk. I mean, there's risk tolerance. That's how they do it. Everything's a risk tolerance. Why do I have to pay more interest rate? The good thing about mortgages is it's not like cars, for example. Cars can go from you have great credit and you have a 2% interest rate to you have bad credit and you have a 24.9. It's not that wide of a range. It's like 1% or 1.5%, depending on what program, all that, between maybe the highest and lowest. The other thing I want to touch on that you said about the 20% down was really good. Not only do you not need 20% down, most of the times I don't recommend somebody put 20% down if they have 20% down. So not only if you're out there and like, okay, I still want to do that because I want to get out of mortgage insurance, have a good conversation with even a financial advisor. You can have one with me because I do a lot more, I have a lot of conversation with financial advisors. So I really am educated on like what you need to do in your whole financial picture. What I can say is really quickly to think about is When you put your money, when you put 20% in your house, it's pretty much gone. Okay. It's in your house. Now you can say, well, I can pull out a second mortgage. Yes. But then how much is that going to cost you? Now you're defeating the whole purpose. But you can't just do a refinance and get money back out and just keep the same interest rate. It doesn't happen. So if you have 40,000 in your 42,000 in your bank account, you're going to put 40,000 down to put 20% down. Is that really good? We know in the coronavirus time, people got in trouble and they didn't have assets. So if you have 20% down, don't necessarily think that's what I need to do still. So just have some good conversations with someone like myself that's educated themselves and hung around a lot of financial advisors and invest thousands and thousands of dollars every month that knows what they're talking about, or talk directly to a financial advisor as well, and have them both kind of collaborate on your mortgage if you're thinking about doing that before you make that decision. Very, very valuable.
And, you know, that's great that you brought that up, and because that's another reason that going with a local lender, especially one that's seasoned, and has some knowledge, they can help you with those things where, you know, an online mortgage company is not going to give you any of that advice. They're not even going to know about it. And, you know, and also some other inexperienced loan officers out there, they aren't as knowledgeable either, but most of them work for a company and have other people in their office that can kind of give them some guidance and help them with that if they, you know, don't know. And I know even Movement Mortgage, that there's a lot of training that goes on, just like at Keller Williams. And, you know, we're always apprised of what is coming on, what's, you know, what is coming up in the future, what's available now, you know, so we are educating ourselves regularly. And so we can educate the public and make sure that they're getting the best possible service that they can. It's very important to me, for my clients to have a good experience with whoever that I refer them to, because it does reflect on me. So I'm always looking to partner with people that I can trust myself and that I would do business with before I refer them. But occasionally, especially when I'm on the other end and I'm not involved with the buyer, that you know, I don't really have the opportunity to guide them, but I still have enough knowledge and have worked enough with good lenders that I know when they're not getting the right service or get enough service. And it doesn't mean that I'm going to tell them to go to someone else. It's just that if I know that it can happen, or if I know that there's something out there that can help them, then I'm going to tell the other agent about it. I'm not going to try to, you know, be the expert, but I'm going to let them know, hey, you might want to talk to your buyer or find out about this. And I know that whenever we've come up on the multiple listing, multiple offer situation, especially in this market, the way it's been for the last year is, you know, we have a slim pickings anyway. We don't have very many listings, but when a buyer does find a property that they want, if they don't have, you know, a good solid pre-approval letter, then they're already starting you know, at the end of the line. And so I always try to make sure that up front we're getting our pre-approval, and we, you know, are pretty good about, you know, pretty solid as far as this loan is going to be able to be funded. Which brings me to another subject, is that I don't think that most of us realize that whenever we go to a bank or to a mortgage company and we ask for a loan, that is actually who is giving us the money. So I don't know if Movement Mortgage brokers out and looks for different lenders, or they're called investors, which there's just a lot of confusion there. And if you don't have experience and you don't realize this, but it's very unlikely that the bank that you go and get your loan through is actually going to be the one that services it. So that's something else. It doesn't really matter to the buyer exactly who they're making their payment to, but they do have to understand that the people making the decision are actually the investors on whether they're actually going to invest in that loan. And so that sometimes holds us up too, because, you know, the lender, the broker, mortgage broker can't find somebody that's willing to take this loan because of different things. But that's something that that I run into occasionally, that, you know, we just have a little bit of trouble finding somebody that's willing to take the risk, especially when their credit score is a little, you know, low. And
yeah. Well, I mean, so yeah, there's two different types of lending, and it's direct lending, obviously, and broker. We're direct lender. You know, we directly, like, we have our own. What that means is we have our own underwriters. It's not based on, you know, we're throwing it out to different places and say, okay, is this good? And there's underwriters underwriting that file for us. It's us underwriting it according to guidelines. For example, we say, oh, this is our standards, this is what we're doing, and we don't have to shop that around or have a whole bunch of different standards that we're trying to navigate through. Brokers will do that. I don't like the broker channels. Like, I can broker. Like, we have the channels to broker. I have not brokered a loan in 4 years.
okay.
And the reason I don't broker a loan is because I just don't like that service level. I don't want that for my client. I want a streamlined process. I want to control, you know, I want to be a little control freak, but that's good. You want your team to be a little bit of control freak on your loan to make sure that you're getting the best service and it's going to go through, and you don't have the hiccups. And that can happen, definitely. There is banks that broker their loans too, but some of them do it directly. So all you can just really ask the question, are you a direct lender or do you broker your loans out? My preference and what I would say is that if you're able to do a loan and not broker it out, I would do a direct loan, because there's more operational control, which is, you know, lends itself to being a better, smoother process. You know, that's my personal belief, and that's why I don't even broker, even though I can broker some of these, but I just don't do that.
Yeah. Well, and that's something, like I said, I wasn't sure about, but is there anything else that you think that would be important, or that you would like for the public to know?
Absolutely. I think the number one thing, the number one breakdown, again, is communication, and that comes from both sides. What I would say is, if you have a lender out there locally, or even if it's from an online bank, if you're talking to them, if you're the buyer, you're the client, have those conversations with your loan officer. Try to have those conversations. Give them an opportunity. The only time that things break down is sometimes, you know, even sometimes agents will try to filter those messages, and it's like talking around the room, and all of a sudden it's just not the same, right? And it's confusing. Talk directly to your lender. If something doesn't feel right, ask questions. If you still don't feel right and feel uneasy about what's going on, and you're asking why, or they're stop responding to you, that's maybe a time to make a move. Okay.
Right.
And so, you know, that's a time to really get the answers, but give the opportunity and ask the questions. If you don't understand something, please don't even ask your agent. Ask first that loan officer, because they are the ones in control of their loan. If something doesn't smell right, ask them the questions. If then something doesn't feel right, then maybe you go to, you know, to your real estate agent, maybe get some help. Maybe they can direct you to somebody that they feel more comfortable with. But give that opportunity, because that is the biggest thing you can do, because we don't sometimes know, because there's so much. Again, start this premise. There's so much. And I tell clients up front, I say, listen, I'm not going to tell you everything about this loan process, because I would overwhelm you.
Right. Yeah. I don't want to know either.
Right. But I will tell them, listen, here, I'm going to tell you the basics. I'm going to tell you what's going on. When you have questions, we got answers. Ask these questions. You're going to have answers. It's not if you have questions, it's when you have any questions. We are built on trust, and we need you to ask us questions and do that. So have an open, honest, good dialogue with your loan officer. That's going to be best serve you. If you feel something's not right in your gut, ask questions. You don't get the answers, then you need to make a move and do something else.
Yeah. The one thing that I hate the worst is whenever I have to go, or someone ends up going over the loan officer you know, talks to their manager or whatever, that's not a good situation. And I mean, it's not necessarily always the loan officer's fault. Most of the time it's probably not, but if they have knowledge and they have the connections with their underwriting department, and, you know, there's some things that they can do to communicate. I mean, there's lots of things that as the buyer, the consumer, you don't know what to expect, and you don't know unless your real estate agent, especially your loan officer, is giving you information and explaining to you what that means. Like, you don't know what happens, you know, after you turn your paperwork in, you know, where does it go from there? Who is, you know, handling your file? And we, in the loan process, underwriting is mentioned a lot. And the person that's on the other end, the buyer, the seller, doesn't necessarily know what an underwriter means. It's in underwriting. What does that mean?
Right. What an underwriter means. So underwriters sit, they're kind of like the Wizard of Oz that sit behind the the curtain, the great, powerful underwriter. So I've been to companies. I've actually been at companies. That's what it feels like. The great and powerful, like you can't talk to them. Actually, we can talk to them. They're really good. But listen, they're there to make sure that loan is serviceable, because each one has a guideline. So their job is to make sure that, because FHA, for example, can come in and audit and go, nope, and it can cost $30,000 to $40,000 for a loan that's non-fundable by FHA. So when people are asking, sometimes like, this is a guideline, you have to understand, you know, there's risk involved in any of these loans. But the underwriter is there to look over those documents to make sure that it meets the guidelines. It is the job of the loan officer sometimes to really, once it goes in underwriting, to be your advocate. I'm an advocate for my, you know, all my clients. Like, my team is like, we see something, we're like, how do we get around this? Is there a loophole? Is there, I mean, on a weekly basis, there's loopholes. I'm doing, you know, I'll close like 30 something loans next month. There's a lot of loopholes that I've had to run through, right? There's so many, because the underwriter goes, okay, and they're not trained so much to think outside the box sometimes. They're there to go, okay, here it is. It's a loan officer's job to try to fight for you. And so when it goes to underwriting and there's conditions, a lot of times we can just collect those docs and just send those in. Sometimes it can be like, okay, we got to massage this. And so the underwriter is there to protect the assets. They're there to make sure it meets. And it's a loan officer's job to advocate for the buyer. And so when it goes underwriting, they're going to say, hey, it's underwritten and here's the conditions. It's approved with conditions. And that's the best thing you can have off the bat. There's always something that else they're going to want. And, you know, it's
a lot of times that's just like, you know, turning in check stubs or something. It's not always a bad thing when there's conditions. But gosh, Adam, we could go on, and there's lots of more questions that I have, so maybe we'll do this again, but I'm going to run out of time on my Zoom account here. And I really think this has been great information, and I'm very excited about getting to offer this to the public, and just to get some things cleared up that I know that have been questions of my clients in the past, and even myself. So I really do appreciate you taking the time to go over this, and let's schedule another call to get on, and we'll talk a little bit more about underwriting and some of the other stuff that goes on in the background, and just to give some more education to our friends and clients.
Absolutely. Love to.
Thank you so much.
Thank you.
Have a great afternoon, evening. Bye.
Bye.